So a quick down move to end last week. If you remember in the previous video on this channel, I referenced how I wanted to see a pullback back to around roughly 424 to 426 up in this range. We ended up going straight through that based on not only the daily, but also the weekly close of last week. A lot of that due to OpEx, which can be misleading. So we'll of course see here on Monday. However, this brings an even bigger opportunity, especially as we're near the previous lows that formed in October. If we do see this level hold, especially into tomorrow, then we can bounce back up from here. Otherwise, because this is a bearish setup just based on the 3 daily candles, then I'm looking for some form of a bottom with a slightly lower low around 415 to 417. As I previously said, with the two scenarios, we're either looking at a higher low somewhere around this range over here, which is what I would have liked to see from a pullback. Based on how bearish this is, we actually have a 3 black crows set up on the daily. If we do want to print a lower low, we'll know very soon this week between Monday and Tuesday, and that would tell us if 415 to 417 is on the table. Regardless of either option, we are looking at a lot more upside into end of year. So at some point around this range, either the higher low will form or the bottom that I'm looking for this finale will form, followed by upside. Now, the reason why 415 to 417 is so interesting if we were to get there is this is the previous breakout level from April. If you remember, we consolidated for 5 weeks straight earlier this year in between April and May, and then we broke out of that range eventually. This range is super critical. So if we do see it get tested, which there is momentum to the downside so far, it's possible it could get tested this week, then this is a very bullish area that I personally will load as well if we do get to it, as I expect it to hold. And of course, I do have my bullish thesis into end of year as well. So this is a key retest of a previous large breakout level. This is not like a mini breakout. This is a major breakout, 5 weeks straight of consolidation, and it started this major rally afterwards. So if it were to get retested, do look for some type of reversal around here. Otherwise, we are near the previous low from early October. So in the short term, bulls would like to defend this low so we can get some form of bounce. And based on that bounce, we would know if that would warrant a higher low or not. So regardless, just to keep things simple, we are within that range that I'm looking at there being a bottom. This comes after the distribution that I was looking at in the last video. So we did get that pullback. So far, it's fairly strong. So it's possible we could see a little bit more, like I just said. But regardless, I'm interested in longs down here and will continue to be as long as we remain above this roughly 415 level, this previous breakout level, which also is a very nice convergence with the golden pocket. If you're familiar with Fibonacci, we just do something simple here and use golden pocket in a Fibonacci sequence. You can see there's a nice convergence of the start of the golden pocket, which is in between this green range here, both of these between the 0.382 and the 0.618. We're looking at a key level at 416.96, which is smack in the middle of the range that I just provided to you. So if we were to see that, that is a lot of support around that range. So just keep that in mind for this week if we do decide to make a little bit of a lower low before continuing upwards. Otherwise, though, cannot stress enough, this looks very nice, ripe for more upside once this bottom has been established, which I would expect would happen very soon. At this point right here, we are entering a time period of more bullish seasonality, especially after we get out of the month of October. And also, if we go over here to tech, you can see this is a super bullish setup alone. You can see just macro-wise, this is a cup and handle setup. We are flagging for at least the handle portion of the cup and then handle. So we're going to want to see this lower end of the trend line hold. It's still possible you could have a flush scenario like final capitulation under this trend line for a couple days. For example, we go back into the mid 340s. See 343, 344 on a capitulation day, followed by a candle that reclaims this trend line. Then we continue upwards. This would actually wipe out a lot of longs if this were to be the case. So just keep an open mind on that macro wise. But for the most part, I really like this setup so far. You'd have to see a clear indication of a breakdown below in order to invalidate that. We're not even talking just a weekly candle. You want to see 2 weekly candles below this trend line in order to invalidate this entire bullish setup at the moment. So we'll see this week. We're still above the lower end trend line here for support. So we will want to see that hold because that, of course, would make things a bit easier for a clear indication of upside. If we do have that capitulation scenario, then you'll see a lot more fear in the markets and things will really start to pick up quickly. But otherwise, at the moment, Still sticking with my thesis of more upside. I really like this. See this as an opportunity personally to load up on longs. So I like what I see right here. And then also when I go over to cheddar flow here, we're actually starting to see more of mixed flow just based on Friday. Now, yes, Friday was OpEx, so we want to see more consistency of this flow, but it was overwhelmingly bearish, especially the past couple weeks, especially as we were going up. If you go back to SPY's chart over here, as we were leading up after this bottom and then throughout this distribution phase that I was referencing before this consolidation, we saw a lot of bearish flow, and now it seems to be a bit more mixed just based on Friday. So Monday and Tuesday will confirm if the trend is changing. We of course saw some large puts, but a lot of calls as well. So this in the money call, out the money call for SPY over here, also out the money for QQQ, starting to load those January calls. So these people are bullish into the end of the year just based on their positioning. A lot of puts that were being sold as well. Traders capitalizing on downside if they did enter those puts, kind of like I just said in that distribution phase over here. They can capitalize on them after that downside move we saw at the end of week. But we are starting to see flow get really mixed here, a lot more calls than previously. So if that starts to be the trend, then we can see things change up, and then the actual trend can continue up after that. So that's something that I'm watching for. And then also something else I'm watching for, as you guys know, is dark pool activity. And we saw a ton of it on Friday. Now, keep in mind, Friday was not back. So typically you see larger singular dark pool prints. It doesn't really have as much of an effect on the signature dark pool prints. Two different prints there. But based on the signature dark pool prints, we had 4.6 billion at the 426.61 level. So it is a lot higher than where we closed on the day. Bulls will want to reclaim this level. So do mark around this range, roughly this 426 mid range. They're going to want to reclaim in order to warrant more upside. So if you're someone that doesn't want to basically catch a falling knife at the moment, just because of this three black crows scenario we have right here, this setup, you could just put a horizontal line right around 426.50, something as simple as this, and wait for price to get back above it for confirmation. This would be bullish confirmation of more upside if we were able to hold above. So I would definitely recommend you do something like this just to compartmentalize where we need to go in order for there to be a bullish emphasis. And also it mitigates a lot of downside risk. If we were to go back to 415, like I was talking about earlier for that second scenario of having a retest of that previous breakout, you can totally eliminate any downside risk by waiting for price to get back above 426.50, or this range that I just showed you right here. So this super key print, a lot of premium behind it. Super rare that you see over 4 billion in premium. And then also we had a 1.3 billion worth, a little bit lower. So this range definitely critical for bulls to reclaim. And also if you're bearish and you want to see more downside here, you're going to want to hold under that. So this critical pivot, and also why this is so critical beyond the fact that we have a lot of premium here. So if you remember a couple weeks ago, around 425.7 to 425.9 on SPY, there was around 5 billion worth of signature dark pool prints. So if we're able to reclaim around that range, which is really close to 426.50, you're looking at about a buck range, roughly between 425 mid to 426 mid. We get over that, that's looking a lot more bullish. But at the moment, the daily and weekly close is under, so you just have to keep that in mind going forward. And again, this is a great way to reduce your amount of downside risk if you do choose to implement this strategy. But regardless, we did see a large print on Friday, so do mark this level on your chart. And last thing I do want to mention is the VIX. We saw an uptick, not an insane amount considering how far down the S&P 500 fell on Friday. However, we did see an uptick, and the weekly close was another bullish weekly close as of last week. You can see right here, the previous week we had a nice pickup candle followed by more upside, a clean and very strong candle to the upside. Typically when you see strong candles in the VIX for a weekly close, tend to have some type of a wick at least above for the following week. Doesn't mean it has to close above, but it is something to watch for. You can see, for example, over here, strong weekly close, then we hit a wick above the following week. And you could even see in recent times, strong weekly close, wick above in the following week as well. You can see over here too, we actually had a bearish close for the following week, but we did have that wick above. So that is something to watch for if that is to be the case. If we were to have, for example, on the S&P 500, a gap down tomorrow, I am looking at this range over here, especially once we hit around 4,200. It's being very supportive where there could be a pickup back to the previous range. So there's a lot of supports under here. It's definitely not a good idea to be super aggressive on shorts down here at the bare minimum. Personally, I'm going long around this range, like I just said, but you do want to be careful if you are short at the moment, because there can be a lot of pops from around this range. Very supportive, like I just said. So regardless, that's what I'm watching for this week. Expect a lot of volatility, especially based on the weekly close I just showed you here for the VIX. We're all the way back into the 20s. It's been a while since we had a weekly close back in the 20s, since all the way back here around March. So different trading environment, but I do believe it will subside shortly. So I guess enjoy it while it lasts if you are a day trader. And also there is opportunity for a long swing as well at the moment. So regardless, I will see you guys in the next video.